This presentation is about the Power ETF system. This is one of the simplest ways to make money using OracleTrader. Simple but very powerful. First of all, what is an ETF? Well, an ETF stands for Exchange Traded Fund. What that means is a group of stocks or a basket of stocks is represented by a single ticker symbol that you can trade as a stock. For example, DIA represents the Dow Jones Industrials. Some of the popular ETFs are SPY, which represent the S&P 500, QQQQ, which represent the top NASDAQ 100 stocks. And in this demo that we're most interested in is SSO and SDS, each which represent the S&P 500 in both directions. For example, if you bought SSO, you would gain if the market rises. If you bought SDS, you would gain if the market falls. And both of these are 2 to 1. 2 to 1 the actual direction. Now here's how you do this system. As you recall, the ratings are the heart of OracleTrader. So using the ratings itself, you can gauge the market direction. The way you do that is you first take the top 5 scores for the day and you add them together. In this case, these add up to 158.79. Alright, you put that aside. Then you go back to the ratings and you reverse the sort so you can get the worst 5. You do that by clicking the heading and it flips the sort. Now we add up the worst 5 scores and we get negative 59.51. Now add that to what we just did, add those together, and you come up with, in this case, plus 99.28, which is positive. In which case the market will probably rise, so you buy SSO. Now if that score were negative, you would have bought SDS. It's really that simple. So to repeat, SSO if positive score, SDS if negative score. Now when do you buy these? Well, the best time is probably right before the market closes, because then you can get set up for the next session. And that's also when the Oracle ratings are the most accurate. A better question is when to sell. Well, there's 3 conditions that you should sell. The first condition is if your gains are huge. Now that's somewhat subjective, but for example, if you have 8, 9, 10% gains right out of the gate, take the gains. Don't let them fizzle out. The second condition you should sell is when the score changes. For example, if the score was positive yesterday, now it's negative, get rid of it, change it. And last is you should sell if you get stopped out. That means you need to limit your losses. Let's talk about the importance of stops. You cannot, I repeat, you cannot let your losses spiral out of control. And that can happen. You will not always be right. You must not let that occur or you will ruin your portfolio. I recommend a maximum loss on any trade from 3.5% to 4%, tops. Now let's look at a 2-month example of using this system. Here's the S&P 500 for the last 6 months. I took a 2-month period of time. Right there, that band, the scores were almost all negative. During that time, SDS, which is what you would have bought, gained 42%. Now the next strip, the next band of time, the scores were mostly positive, and you would have bought SSO, which would gain 15% during that time. And then you have another band, which you would have bought SDS, which gained 33%. That 2 months of results would have accumulated to 202%. You can't beat that.